All right.
Oh,
Here's
I'm trying to get here.
okay, brother. There you are. Hey, we got a little poll going on here. What about a rate cut? Oh, there you go. All right.
I
We get
say,
a lot of votes. We get some quarter pointers.
I think you and I are on the same page. Like, they don't need to cut rates, but they might cut rates.
But they might not to keep their independence and tell Trump we're not going to do what you want us to do. We're going to maintain our independence. And really, man, this guy has a lot of conflicting data to deal with and a lot of uh, complex data to deal with. So I don't know how you make sense out of what you should do right here, but he'd probably be best to do nothing. So fill in the poll there, people. Let us know if you think we're going to get a rate cut or no rate cut. Jeffrey and I are in the no rate cut camp.
I would expect no rate cut, but we'll see what happens.
Yeah, and I told him, Jeffrey, we're going to be on every day now.
That's I think the team wants to start that next week, so we're gonna
Yeah.
try to work into that, I think.
There's Pete de Brock. Hello from the Netherlands. And Pete de Brock, everyone was asking us again, what is the broker you use in Europe to do the trades we do here? I'd love to know that. Again, I forgot it. You told us one time, but if you could type it in, that'd be great. Bodine says a quarter point cut. Maggie says yes, a cut. Bodine says quarter point cut. Oh, wow. There's the results of the poll. All right.
81%.
81% say rate cut.
Yeah.
All right. Well, there you go. There you have it.
I mean, it won't surprise me to get a rate cut because of such high expectations, but I'm prepared for no rate cut because the consequences of that we could instantly see 3-4% down in the next couple of days. Now, that doesn't mean we won't go higher because that's confidence in the market right now, is what that would say.
Yeah,
So this is all like, do we have confidence in the market? Do we not? A rate cut, especially a bigger than expected rate cut, is kind of saying that we're not so confident in the market, and
exactly.
that could bring an outsized pullback. So it's like if no rate cut or bigger than expected rate cut, like those are two sides where down would be what I expect.
That's right. That's my feeling is that this can be interpreted in a number of different ways. It could be that the economy is worse off and people are going to bail on it. Uh, Otherwise, he might think, hey, we just need to stimulate it a little more, and there you got it. But we could see a big sell-off no matter what happens. And one thing you got to remember here, John is saying we need rate cut for real estate stimulus and debt, and Mike says cut mortgage rates. But I got to tell you, this Fed rate has nothing to do with mortgages. Mortgage rates
That's
bounce off the 10-year bond. So we could see a rate cut and no cut in mortgages, although mortgage rates are coming down. But this Powell won't have anything to do with that.
you
Gregory
know,
Glick says, hang on if we don't see a rate cut. Ooh.
but you know, uh, the Bank of England. I'm trying to remember what it's called. Bank of England just did a rate cut last month,
Yeah.
and their mortgages went up a half a point.
Yeah. Weird. Thank
So
you, Pete, for putting that in. For everybody who wants to know, he uses Interactive Brokers in Ireland, MEXEM.
I was going to say
Yeah.
Interactive Brokers is the one I know of that a lot of international friends of mine use that trade. So this is the poly market here, Jack. We're down to 90%. Yesterday we were at 96% when we were talking.
Yeah.
We're
Now,
down.
I couldn't bet on this. It's not open to Americans in the United States. So,
Not yet. They're supposed to be the CEO just got or the company just got a determination from the CFTC, I think it was, Commodities Futures Trading CFTC, yeah, Commodities and Future Trading Commission, that they they'll allow them to operate in the US.
yeah.
So,
They're headquartered in the US. So they were in the US, then they're out. Hopefully they'll get back in, but it doesn't matter to me.
and Robinhood's trying to break into this market too. So, they're trying to push out all these different betting things. And then Blake was pointing out that Kalshi is available to US people, but the payout not quite as spicy as the poly market. The poly market is based on actual crypto. So these are crypto-based contracts, and Polygon is the ecosystem that runs underneath this. It's kind of just interesting stuff.
Very.
All right, Jack. I just rolled one.
What, like a joint or a cigar?
No, an option contract. I had an,
Okay.
I
Sorry.
had I had this 83 strike sold for this Friday, and then Docu right here trading right at 83. I just moved it. I just bought that back, sold the 84 for next week, one strike higher, collected 15 cents, not a huge collection, but I get $1 more upside on the underlying. So actually, when you look at that across my 300 shares, that's a $345 potential upside
Nice.
for adding one more week to this position.
Now, folks at home, what you do here is you sell to open the put, and when you cover it, you buy to close it, and then when you roll it, you sell to open again. Pretty
Yeah,
simple.
so last week when we had, dipped over here back down to 78, I bought back I had one up here at 84, I think it was. I bought that back, sold in 83 for this Friday. Now that we've run up into 83, I just bought that back, sold, went up to 84 again, sold that 84, collected 15 cents a contract to do that. When I bought and sold in one order, bought back 83, strike, sold, bought this back, sold an 84, strike. The net credit, 15 cents per contract. I had 300 shares, so that's 3 contracts. That gets me $45 in credit total. Plus, I moved up a strike. So $1 move higher on 300 shares is 300 bucks. And that gets us, those two things together, gets us $345. Potential more on the upside, just for holding on to it for another week.
Now, have you ever been assigned the stock, or are you doing all this without touching the shares?
No, these are calls. Like, this is upside calls. I I
Okay.
I
You
got put
went
this
long.
one on this drop back here.
So you're rolling out the covered call.
Yeah. At this point, I was banking on this going higher, and I got put over here on the earnings, and I've been riding it out. So waiting on this one to work out here, my favor.
Yeah, that's a nice one. Calls have been amazing. Um, I'm going higher up on my calls because I just don't want to get this stuff called away right now. So I'm selling like the 400 strike call on AVGO and stuff like that. But this is a great trade.
Yeah, this one has potential for 100, 115 up here, and right now I'm just sitting at 84 for the next week.
Definitely
But
over 106. Yeah.
yeah, definitely, we can definitely see it back to the highs, and definitely this gap fill right here at 92.
The only thing better for you would be if they paid a dividend along the way.
Hey, beggars can't be choosers all the time,
Right. We
I've
were
made
talking about dividend stocks the other day, and a lot of people are worried about, a huge sell-off in the market for whatever reason, something we don't see coming, or something people just want to have a reason to sell. The market's looking for a reason to go down. And when you're in these tech stocks like I am, those are the ones that are going to get hit hard. But when you're in the dividend portfolio, like we are in with McDonald's, McDonald's can go from $300 down to $13 a share, and they're still going to pay the dividend. So, yeah, Bodine says sometimes a dividend payout makes it more likely someone will assign you to take the stock. Yeah, they drop a little bit when they pay out at their dividend, but not that much. It's just a good thing to have an additional dividend portfolio in addition to your regular trading stuff, because you're still going to get paid no matter what prices the stocks go to.
And you can see over here, I've done 12 trades on Docu so far. It comes in at my
Yeah,
third most
dude.
valuable at almost 2,000. I guess that's $1,600 so far I've made on this, just rolling puts and rolling calls. That's just
Good.
option premium, not counting any share appreciation at all right now.
That's great money.
So that's just keeping it rolling, keeping it rolling. So that's one I've actively did just a few minutes ago.
Oh, yeah,
All right, AVGO looks
got
like
a
we're
little
pulling back just a
pullback.
little bit.
Yeah, I'm still not too worried. That gap has to be filled in going forward somewhere. But I sold the 342.50 and bought the 340. And we got 2 more days. I think I'm good to go. If not, I'll deal with it.
Yeah, I know this one over here.
Now I sold the 250 strike call on this, and I'm really surprised once that gap happened at 230 that it went to 247 or higher. This the stretch is what I call it on this is almost straight up. So this is going to run out of gas sometime. But
Yeah,
again, this one got a lot of short squeeze going, so
yeah,
we'll
my
see.
target on it right here, just 263. That might be where we top out.
Oh man, you think we can go that much higher? That's a straight up spike right there off that gap.
Yeah, well, I mean, look at this baby. Same chart, same pattern, same. We
That's
came
why
right up.
that's why when I sold the 250 strikes on my Goog, that I thought it would have a little pullback like this, a little fade, because that's an overreaction on earnings that they had.
Yeah, we didn't quite hit this 565 right here, which is the same fib level that I've got highlighted at Google on Google there at 263. So that was an extreme move, and now we're pulling back. So that's what I expect to happen on Google if we tag that upper line. So
I do too.
if we tag, if for some reason we pop that 263, it'll probably be short lived, and we'll probably pull it back down in here, somewhere around the 230 area. Like you said, we left that gap down here below 230. We may come back to revisit that after we tag this up here. Come back down in here, find support, maybe retest the breakout even,
Yeah, that's
and
a
then go
good
higher.
spot. Exactly. Test that spot right where it broke, right where it gapped, and then go back up.
That's just natural price action. It happens over and over and over and over and over and
Yeah,
over.
it does.
So expecting things to do the rare, that's not where you make. I mean, if you can be right on it, you can make big money, but most of the time, the high majority, 80-20, right? 80% of the time it's going to do what you expect it, what it does all the time. 20% of the time you might get that outsized reaction. And if you are positioned for it, you might get 80% of your gains. But most of the time, it's just going to do the same thing it always does.
Yeah.
So I kind of got into being a guru by my Echo Trade system that looks for patterns that just keep repeating in the market. And I call them echoes, the pullbacks, the continuations. They're never exactly the same, but they do echo the market over and over and over. So,
Good stuff. How
all
about
righty.
IBIT?
Yeah. Got a little, getting a little spicy in crypto here. Jack, I don't know if you noticed the last, say, week or so, but the option premiums from now through the end of the year, all of a sudden the IV started going up across all of it, everything crypto related in the
Why
last.
why would you think that's happening?
To me, that's telling me that the market makers or the people controlling the prices on options are expecting some kind of upside chaos or downside chaos. But the what I'm seeing is taking advantage of a big move up is getting priced out of the options.
Yep.
So people that are going to buy options to try to take advantage of a big pop are getting priced out of any advantage they might have for that upside pop.
Now, when we say priced out, folks, what we mean is the options market makers have already set the price of the calls to reflect what would be a, so you would need a bigger jump than normal to even see any gain in your call option price.
Yeah, right now they're through the end of the year on these, at the monies, which is basically a 66 on IBIT. They're pricing in roughly about a $13 move right there. So take 66 and add 13, 66, add 13. That would be $79 right there.
Yeah.
And 80 is kind of where we talked about the top potentially being before.
Yeah. Are you ever concerned about one of these Bitcoin whales coming in and just dumping?
I mean, that's a real concern, real problem that could happen with
Yeah.
only 21 million coins and a lot of it locked up for a long time.
Yeah, from
Somebody
back in the
somebody could
day.
just decide it's time to cash out.
That happens. Some of these guys that were long 10 years ago, they're for whatever reason, that's a long hold 10 years. I'm not too worried about a whale selling because that would be a blip in the trend. I still think the trend is up. I sold the
I,
65 puts several times and I got assigned one time. So I love where this is right now. And you could sell covered calls on this, naked puts, credit spreads. This has got the Triple Crown written all over it. Three great ways to make income.
Now, a whale coming in selling, it's possible, but what we're going to see is those coins move to an exchange first. So there's going to be signs, unless they just work a private deal in the background to sell their coins to another big holder like BlackRock.
Right.
Um, they would have to work some sort of backdoor side deal to not just decimate the market,
That
or
that
they
would be
or the,
better. That would be better for the whale to sell without disrupting the market. He's going to take a haircut, right? They might give him 80% of everything he's got, but he would drive the market down if he didn't do a like almost like a private placement, you know.
yeah, there's no dark pool for crypto at
No.
this point. So he would have to go to somebody, or work a deal with like Strategy, or work a deal with Mora, or one of the big Bitcoin treasury companies. BitcoinTreasuries.net, in case anybody's not seen this before. This is the companies that are keeping Bitcoin on their balance sheet, the top 100 right here. We have Strategy, that's MSTR coming in number 1. Mara Holdings, MARA, coming in number 2. CEP coming in number 3. We've got Bitcoin Standard Treasury Company, BSTR, coming in number 4. Number 5, Bullish, that's a brand new IPO, BLSH. Then Metaplanet coming in number 6. Riot, historical Bitcoin miner. So 2 of the top ones in here are historical miners. MSTR, the original, the OG on Bitcoin Treasury, just buying it up. And the demand for these companies right here, buying Bitcoin right now, is about 1,400 coins a day, while the actual production of Bitcoin is only like 400. So there's a big gap in there.
Big gap. No, what's funny, you got 100 companies right there. And I remember when one company bought Bitcoin, that company being Tesla, and now they were saying, "Hey, this rat poison called crypto is now in the S&P 500 by virtue of the fact that Tesla bought crypto. So now Bitcoin is going to kill the S&P 500 when it goes down." Well, not only was that not the case, but 99 other companies jumped on the train and added Bitcoin to their ledger.
And you've got, right now you got Tesla in there. You've got Block, which is Square. That's the company that runs Square, sitting there at number 13. And you've got Strategy up here, and Mora, and Riot. I mean, you got lots of companies holding lots of big chunks of Bitcoin here.
Yes. It's crazy too because that's when you buy this on a loan, which a lot of these guys are borrowing money or doing a debt offering or a secondary offering of stock to then go ahead and buy the Bitcoin. The only problem I see when you're leveraged to when you're borrowing money to buy the Bitcoin is the Bitcoin doesn't pay a dividend or any interest. So it's kind of just sitting there and you really need it to go up because you're paying that debt payment every month, and this thing has to go higher than the interest on your debt, and that's a squeaky deal.
And that's one of the big risks that we have right now, looking forward in the next couple of years, is if we have a hiccup in the price of Bitcoin and you borrowed money to buy your Bitcoin as one of these treasuries, how do you pay that debt? How do you pay your employees? How do you pay your maintenance costs for your company if you're underwater and your bank says, "Hey, we're calling the loan"?
You issue more debt.
So you'd have to issue more debt just to service the debt, and then
Yeah,
you're in a down cycle, or you got to sell some of your crypto at a loss. And
can't do that. You can't do that. The books, that would ruin the books to take the loss. You don't take a loss when you borrow more money and you're banking on the fact that it's going to go up and you could pay. Yeah, move the loans around. That's what Rob Royer says. Move the loans around. That's what they'll do. David Saylor. He's the best at it. Highly leveraged, meaning borrow a lot of money to buy Bitcoin, and he'd probably take a deal from any whale at a 80% haircut, right?
yeah, and what's interesting right here, Jack? These companies, Bitcoin treasuries and the other treasuries that are like Ethereum and Solana and XRP and whatever else are out there. Just 3 months ago, they were valued at 1.3 times the crypto that they hold.
It's not
One point,
smart.
3 months ago, that was the average value. Currently, as of this past weekend, that 1.3 has dropped down to 0.95%. So 95% of the crypto they hold
Instead of 130%.
instead of 130%. So the market is pricing in the risk of, like a 5% risk of crypto going down for the value of these companies. I thought that was fascinating when I found that analysis.
I think so too. Dennis had a question about options prices, and then we'll come right back to this. He says, when you price in the move using the options chain, is that for the end of the week? That would be for whatever expiration we have it pegged on up there, Dennis, on
Yeah.
the left. So
So this,
you can take it at any date.
yeah, this trick works. You just pick your expiration. It works
Right.
any expiration right here, whether it's this Friday or
Yeah.
Friday in January 2028.
Right. So Dennis, you use the same thing. You just take the bid of an at the money put and the ask of an at the money call, and you can pick any expiration, and that's the expected move for that expiration. Although you got to remember that's that's a bad term to say the expected move. I would rephrase that and say that's the market makers. I don't want to lose my ass price, right? That's my risk price. Not an expected move, because a lot of times that move doesn't happen at all, but they price the options as if that move was already baked in and going to happen, and it doesn't mean it's always going to happen. So that's why I like to be an option seller, because I just think these things are mispriced too high across the board, and you prove that when you're doing it on DocuSign, the Gap, all these non-flashy stocks. You're still showing everybody that the premium is too high.
And, I mean, like this one right here, that's $1.86 up and down priced in here by Friday. And the last few Fridays, we've not moved hardly at all. If
Yeah,
anything, we pulled back just a
yeah.
little bit.
Right, but Sue, they're still pricing it as if this thing is going to pop at any second, and they're just taking the money from the call buyers and
And
the put buyers.
with 2 days left, they're pricing in that kind of money right there. And so you come in here, you look at your options chain, you pick your expiration, whether that's this Friday, that you take your bid on the call side, your bid on the put side, add those together. That gives you the market maker's expected move. What's priced into the options right now. Now, sometimes if you have a theory, something, you've got a, whatever it might be, you come in here and you're like, oh man, they're only pricing in a $2 move. And I am convinced that the pricing and the catalysts and all the things are supporting a $10 move. That's where you get your outsized potential gain. That's where buying a call or buying a put can really make you big money.
Yeah,
But if you're not sure, I'm not sure what Bitcoin's doing by Friday. Not really. So it's much more efficient to come in here and sell credit. Like Jack's saying, he loves to sell credit. And if you don't have the shares, you sell some put credit. If you don't have enough money to, put up the collateral to just sell a naked put, which is a put with no shares and nothing else, you can buy another put below it wherever you want to. The width between them is your risk. So if you sold a 50-cent wide, came in here, sold that one, bought this one, you would get roughly 10 cents credit right there. Your risk, 50 cents minus 10 cents credit. So your risk is 40. Look how crazy this is right now. 64, 64.50, 64 with 2 days left. You can get 20% return on that.
Wild.
That's 20% return on risk right there. Or actually 25% really, because your risk is 40, you're getting 25% return on risk.
Unbelievable. And it's kind of hidden in the market. Unless you're studying this option chain, you wouldn't really even know that you could do this. Now, Jim C has a question that I don't want to ignore. Jim C asks, he's saying, so is there only 1,500 Bitcoins in the hands of individuals based on what you're showing?
No.
No.
70% of the Bitcoins, I think it's 72 point something percent. I think let's just say 72.5% of the Bitcoins that are public right now are in private hands. It's still a very high percentage. We can pop over here on CoinMarketCap. Look at how many coins are actually out there right now. There's 19.922243 Bitcoins out in the public right now. 70% of those are in private hands. That means the rest of those are either tied up in ETFs, Bitcoin treasuries, or Satoshi has 5%. The original author of the Bitcoin thing, 5% of that is tied up in his wallet.
Which
Hadn't
would be
moved.
which would be the CIA, but go ahead.
Yeah, CIA maybe hadn't moved since day one, basically, since the day he disappeared, and nothing's transacted. Nothing. People have sent him coins, but so his wallet's actually increased, but there's never been any transactions since he disappeared from the record. And so there you go. 5% is in Satoshi's wallet, 70 something percent in private holders, and the rest of it held by there's Bitcoin treasury companies, there's the ETFs, there's governments, and then there's exchanges. So those are the that 30% that's held, or the whatever it is, 20% left that's held split between those right there. And the exchanges are actually hitting the lowest level they've been at in 6 years.
Yeah, it's so crazy talking to guys that bought Bitcoin, when it was $7,000 a coin. I had a long talk with a guy and he just was adamant that this thing was going higher. And I thought, man, 7,000 a coin, that looks kind of rich, right? Not now look at
Yeah, now we're sitting at 115, and maybe get up to 150 in this
it.
cycle.
Yeah. My
So
average for the longest time was 67,000 a coin. And yeah, now where it's at here, I'm in pretty good shape.
yeah, I
But
have
when I had
a
BIT, that's a different story. I'm a little bit lower, but not that low. Yeah, Rob Royero, I will have a live class on that tool. We'll talk about assignment in the live class. We'll send you an email and a telegram message about that.
I have been mining Bitcoin, or I've been mining crypto since 2013,
Really?
way back over here, and I actually rent my machines out for other people to use them, and they pay me in Bitcoin to do that. And I've accumulated about zero point 0.4 Bitcoins
Wow.
doing that. with
What do they pay
basic,
you for to rent it? Like the
they pay me
price?
Bitcoin. It works out to roughly right now. Back in the heyday, 4 years ago, I was getting $5 a day basically in crypto, and today that's kind of declined a little bit. I usually average somewhere between $4 to $8 a week right now,
That's great, man.
worth of Bitcoin.
That's awesome. That's better
And
than dollar cost averaging in every week, right?
yeah, I mean, I'm just adding that to the till every week, and it essentially has $0 cost to it for me. I'm just running it on machines that are already running, already doing things, and just letting people, you know, do whatever they want to mine, whatever coins they want to mine, and they just, the software automatically takes care of it. Then, there's no hacking, there's no nothing like that. It's all controlled. They purchase hashing power from an exchange that hashing power runs on my machine, and I get paid the cut of the Bitcoin.
It's kind of like gold, right? How much does it cost to get it out of the ground versus how much does it go for on the market? What kind of spread is there between the cost of mining a coin and selling a coin?
Yeah,
What's it costing them to mine a coin?
I don't even keep up with it much, but for Bitcoin itself, the average cost is $82,000 in electricity to mine a
Damn,
single single Bitcoin.
that's not efficient at all.
So, I mean, but you're making the spread, right? I mean, 82,000, and as long as we're above 82,000, hey, I mean, that's a $30,000 potential profit per coin you mine out right there. So,
Is it still as big a deal as it used to be mining?
it's a lot harder than it has than it it's harder than it ever has been. I
I'm
keep
just
track of this mempool.space right here. You can see the mining happening right here, and you can see the last block that was mined right there, all the transactions that were included. A lot of people don't necessarily understand this, but the difficulty, every other commodity on this planet, if the price gets more expensive, what does that do, Jack?
people get out of it.
No, if the solution to higher prices in commodities is higher prices, there's going to be more people trying to produce that commodity with a higher price, right? Oil goes up, that enables more people to drill oil, increases supply. Gold prices go up, more people can afford to mine gold, it increases supply. So what does that do when more supply comes on the market? This is economics, not, market prices. This is economics. So Bitcoin is different in this aspect right here, because when Bitcoin prices go up, you can't, the algorithm actually controls the rate that Bitcoin's mined, and the difficulty adjusts every 2 weeks. So if you get a big influx of people mining Bitcoin and they speed it up, it's only going to be sped up for 2 weeks, and then it gets harder to mine Bitcoin because the algorithm resets it and makes it more difficult. They increase the difficulty of finding a block in Bitcoin. And the fee that we say mining Bitcoin, but really you're mining the transaction block is what
Yeah.
you're mining, and you get a subsidy fee for authenticating this block of transactions. And this is getting way nerdy in it for everybody, but this is how Bitcoin works. And when you look at it, Mara was the last one to mine a block. They got a subsidy, 3.125 Bitcoins plus the fees for the transactions right there. So $6,000 in fees plus $300,000, $350,000 in actual Bitcoin as the subsidy. So I find it fascinating, and
Yeah.
the difficulty comes from this number right here. I can post it into here, and we can see it. That big number right there is what they're actually. That's actually the number that they're calculating. When we say the difficulty adjusts, the number of zeros that have to be in the front of this number right here increases when the difficulty gets harder.
And I would think that people would do less mining the harder it got. Plus, there's only a limited amount out there, right?
Yeah, I mean, you're only going to get about 450 Bitcoins a day right now, roughly. and it's limited by the algorithm. Every 10 minutes,
Right.
roughly, a, a block comes out. The reward on that block, 3.125 Bitcoins as the
It's a tough
subsidy. And one of the beautiful things, though, like if you were to go buy a piece of equipment to mine Bitcoin, you could do it. There's no restriction other than the cost of the equipment. So it's one of the most fascinating things out there to me.
Yeah, as far as commodities go, which is kind of what it is, it's just way different than anything else. We don't know how much gold is out there. We do know how much Bitcoin is out there. It's just totally different than anything else. And the way it's mined is not like the way gold is mined. It's a crazy thing. And this has outperformed gold. And gold has outperformed the market. This is just the story just gets too crazy. Now we go to Ether. And this is a good one too, folks. This is a good one. It's optionable. You can buy it, sell covered calls. You could get into it for, $3,400 or half of that if you're doing it on margin. You could start the wheel strategy by selling a naked put. And if you get assigned, sell calls. Could also do credit spreads or just buy and hold it.
Yeah.
Very affordable.
And Ethereum's different, though. Now, all the things we've talked about were Bitcoin specific as far as crypto goes. And Ethereum, you notice when you put your hand over it right here on Coin Market Cap, there's no, like when you go over Bitcoin, it says the max supply is 21 million. That's all there's ever going to be. When you go to Ethereum, though, there's no max circulating supply. They can increase and decrease the supply at a whim. Max supply is infinite. Total supply right now 120 million coins. This is it's a different game. All right.
Totally different game.
So buying things that are going to be treasuries on Ethereum is a different game altogether.
I wouldn't want to do
And
that. I don't think that's a good bet at all.
so in the short term, I think that this one has potential to outperform, and it certainly has premium. But bigger picture, iBit is probably your safer bet for now until something else happens in the crypto market. I'm just throwing that out there. If you're trying to be in it for a while, long-term exposure, short-term advantage may be right here until we go into crypto winter, and then iBit may be the better play longer term. All right,
That's where my money's at, folks, just to let you know. I'm long IBIT. I'm not doing anything yet with Ether.
yeah, I have been rolling the 33 call for 4 weeks now. Or I mean 33 put. Right now it's sitting just out of the money.
On the
And we'll see if
IBIT, I've sold the 71 and the 73 strikes. So if it pops like you're saying, I'll have my shares called away.
yeah, I just sold for this week I bought a 64 or no, I sold a 64 put and I sold a 73.50 call. So
Nice.
I got a nice wide range. I own 100 shares, looking to add a little more shares, but also sell that 100 shares for a nice profit.
Yeah, you can always get back in.
Yeah, always. I mean, but October has been my kind of thought it might enter into crypto winter time, so I'm definitely cautious about the calendar. And for anybody that, you can see I've been aggressively selling puts, trying to get put more shares. So
So when you say crypto winter, you mean it goes flat, it goes down, it doesn't have any interest? What do you describe the crypto winter to the good people?
yeah, let's pop over here to a clean chart and talk about crypto winter really quickly. And we're gonna have a guest join us here in just a few minutes. So when we look at Bitcoin's chart, this is the long-term history of Bitcoin from the early days in 2009 when it was basically released to the world all the way up to now. Now, every 4 years, this cycle has played out since Bitcoin started in 2009 here, where we have a rapid price appreciation. We get to a peak, and then we do a 70 to 80% pullback. And then 4 years later, we embark on another cycle that takes us higher again. And then we go into another drawdown. And you can see this play out over and over where we have a run up, a drawdown, 78, 80%. Run up, drawdown, 70, 80%. Run up, drawdown, 70 to 80%. This happens like clockwork every 4 years. And this October fall, between now and the end of the year, I expect that next peak to occur because it's been 4 years from 2021. And 4 years, it's 2025. This peak should happen. And then we'll do the 70 to 80% pullback in the industry. That pullback is called nicknamed crypto winter. Could take us back in the $30,000 to $50,000 area on the pullback. That'll probably bottom sometime late next year, early 2027, late 26, early 27. So there you go.
What's your prediction for the end of the year? Dan asks.
I expect, what's funny, every one of these cycles so far has hit at least 10x whatever the low was on the next high. Every one of these lows, the high that comes after it has been at least 10x the price. This low right here in November of 2022 was about 15,700. So it's pretty easy math. I expect to hit 157,000. But if we come up short, I'll be okay.
Cool. Now, do we have time to look at DJT for our good man in the audience before we get our guest?
Yeah, we can do whatever we want to. We run the show.
Yeah, he asked for our take on DJT. I've never traded it. Uh, I don't like it. It's not in a trend. Well,
Yeah,
actually, it might be in a trend, downtrend.
downtrend for now. Yes, that's true. And the premium was rocking and rolling, at least right up until the last 2 months here, where price quit making giant moves. Now this, I have to be honest with you, Jack. I have some DJT, and we go look at my report here on the symbols. See if it'll load. There we go. DJT comes in at number 2, my number 2 most profitable right now, at $2,700.
Interesting.
And I have 1,200 shares that I've been selling calls against right now. I was selling puts like crazy, collecting massive premium. So right now, that's my number 2 most profitable position. I've been doing in this since the beginning.
Awesome.
Since back in April when I started this.
Jeffrey wants to know, it's a basic question, but why is there pullbacks?
Why are there pullbacks in crypto?
I think it's profit taking.
Emotion, profit taking. Jack and I have talked about this. When higher prices bring more demand until there's no more buyers.
Which is why you always want to sell into strength. I mean, it may look tempting to buy when it's going up, something's going up every day, but that's when you really want to be starting to sell. Sell into strength always if you can.
At some point, we exhaust the buyers. And then what does it take to get people back interested in it again? For Bitcoin, that's a 70 to 80% pullback. And there's another pattern that I call, this is, without a doubt, this is the same market psychology pattern that's right here.
Mm-hmm.
You get people that they're hopeful. You get these early adopters. Then you get people that are optimistic that it's really going to go higher again. Then you get the belief that those people start believing and they tell other people, and then they get thrilled that they're making so much money, and they tell everybody that I got to tell everybody that I know, let's get involved in this, opportunity right here. And then, I'm a genius. We're all geniuses, can't fail, making money in the market. That's easy. You just got to buy Bitcoin. And then a sudden pullback happens, and this thing's so red hot. It just needs to cool off a little bit, and we'll go higher again. But then prices start eroding more. We've exhausted the buyers up here, and we get some anxiety, and then you bum people out, and they're denying it. And oh, sugar honey iced tea, I gotta sell it all before I lose all my money. All my gains are gone. I'm getting 100% out before this thing goes to zero. You get angry that people are short in the market. Why is the government letting Bitcoin drop? And you get depressed about it. How am I ever gonna, retire? How am I ever gonna, get ahead in life? I mean, you trade for very long. You hear people saying all these things about the stock market,
Even in
and
one day.
yeah, even in one day you can hear this. And th- you know, this is the psychology of playing the stock market right here in a chart. And this, I call it the bubble pattern because when it goes exponential, that's nearing the exhaustion of buyers. And we see it over and over and over on charts. Bitcoin goes on that exponential rocket ship. We've seen so many other stocks do it. GME, Tilray, Beyond Meat,
Countless, countless stocks. But
even stuff like Circle and
yeah,
CEP, and, CoreWeave.
yeah, all of it. But you have to look when you look at a trend, folks, and that's what I do. You notice things that are just unsustainable, right? The angle of that rally right there in core weave. I mean, that's almost straight up. And that angle, right? That's not sustainable. When we looked at AutoZone and O'Reilly Auto Group, that they're just like in a 45-degree angle. Their trend. See that toppy part's not sustainable, but when you stretch it out, that's a trend that can continue because it's not too parabolic. You see, it's more like a 45-degree angle that can hold that has held for years. That angle, 45-degree angle, that is sustainable when you go
You see,
back.
every time it gets a little over its skis,
Yeah.
we get
Well,
brought back to reality.
that's how a trend works, though, right? Anytime there's too much loft between the price and the moving average, it's going to gravitate back to that moving average, bounce off of that moving average, and then go higher. But no trend is a straight line. It's going to have those little tops and bottoms within the context of an uptrend. So even on down days within the context of an uptrend, it's still good to buy. But my point is that's a sustainable trend that could keep going. But when you look at this stuff that's straight up, even if it's a week or a month or whatever, that is not that's not sustainable. So, if you get into a stock that's gapped up or you get into a stock that's run up 5 days straight in a row up, that's your sell signal right there because it's not a sustainable trend.
Well, even Microsoft had that same bubble
Yeah,
psychology pattern. We're
yeah,
consolidating here, just need to cool off, but
yeah,
it may take another dive down to retest the breakout.
yeah. That's the nature of a trend. That you can have higher highs within a trend and a pullback, but as long as it's above that moving average, whatever you use, then that trend is continuing. And some angles are just too sharp to sustain. Gaps, stuff like that won't hold.
Yeah, so I'm going to bring on one of my Turnmeyer Trading Lab members. It's my all access VIP group. This guy's been in this group with me since I started this challenge and been sharing every single twist and turn along the way. Um, Sergio, if you want to unmute yourself, pop on, introduce yourself.
Hello, guys. How are you?
I'm doing good.
But
So,
E-
Sergio,
Excellent.
if you don't mind, maybe share a little bit about how you got into trading, how you got interested in it, how you found yourself, just getting started.
Well, I'm like you. I'm a numbers guy. I love numbers. I'm also an engineer, so that's a big part of it. I like human behavior. I love how things move and how people think and how they react. And also wanted to make a little bit more money. I have 3 kids, 2 in college. I don't believe in debt, so you know how fun that is. trying to trying to fund the the college for the kids. So in an effort to try to increase the you know my revenues, I started doing this and I love it. I mean, I totally love it. And then I found you guys, I want to say, and it's been a blessing to be completely brutally honest. It hasn't been easy. You have to put a lot of work. You have to want to study and understand patterns and understand what's going on. And it takes time, but once you get it, I mean, it's incredible. I mean, I don't know if you want to show, we can talk about it later, but as you stated, I started the 50K challenge with you. I started
Yeah.
in 4 other accounts. This one that I just sent you, I opened about 3 months ago. And the reason I did that is because I wanted to link it to K-Info and have nothing before that would have pulled, K-Info pulls everything, right? So I wanted to be solely 50K challenge. And I don't know if you remember, Jeffrey, I was traveling in the summer and I told you, let's
Yeah.
do a healthy competition.
Yep.
And I don't know if you want to tell him who's winning, but
Hey, I, I do a lot of things. The ability to just focus on one thing is, it's very empowering. Now, how long have you been trading? Just to give everybody like a feel for how long you've been at this.
well,
I don't want to get too far away from your beginning.
can can I ask you a question, Jeffrey? And you know
Yeah.
me. How long do you think I've been trading?
Well, knowing you, I'd say maybe not longer than 5 years, possibly.
Well, actually, you are correct. It's been less than 2 years. But when I do something, I go full in. So I've been dedicating for those almost 2 years, about 6 hours a day,
Wow.
studying and doing all the stuff. And I go in, I go full in. My wife can tell you, when I do something, I try to go all the way. So yeah, it's been 2 years. I've never traded from my computer in my life. I had
Oh,
been trading before, but I was a passive trader, right?
yeah.
Like I've been doing it for 20 years or 30, but it's just passive. The way I'm trading now, it's been less than 2 years and never from my computer, which is kind of funny.
So you're always on the go and you're using nothing but a phone, right? That's
Nothing but a phone. My wife just told me she just got me an iPad for Christmas, and I go, okay, let's use it. Let's try using it. I use it to play games on.
all right. So, we have
I think that's
you're a member of my Term Buyer Trading Lab group, which is my all access. You get to see everything I do. And, you know, you joined that a little over, I guess it's been about 18 months ago, roughly. So near
yep,
the beginning of your
more or
journey
less.
trading. You hadn't been trading very long before you found me and decided to jump all in with me. Um,
Smart
can you
decision, by
tell?
the way, Sergio. This is your guy right
Thank
here.
you, Jack. No, it was. It was. I gotta tell you, it was.
Can you tell the group a little bit about your experience, getting on the ground running, just trying to catch up with all your peers? We've got really smart traders in that group, and just give a little experience about how you found a home with my inner circle group.
Well, I mean, your group, number one, it's full of great people, and I'm not just saying that because they may be listening. They're great people. They're there to help. We help each other. I even help sometimes, and it's just a fine group of people, and they all want the same thing for everybody to do good at this, right? So that's number one. Number two, when I joined, I was all over it because, as I said, my brain loves math, loves problem solving, and what you provide, it's a lot. You know that when you first go in, it's like you said it many times, like drinking from a fire hose, and I love that. So it was a little overwhelming at the beginning, but then now it's, I gotta tell you, it's crystal clear and it's easy. And on top of that, it makes you money. It makes you money. Not all the services that you have are for everybody, but I mean, I was doing cover calls, cash secure puts before, but not to the level that you do it. I mean, you were talking about rolling up and out. I never did that. I mean, I had the profit, take it, bye, see you later, but you have something that you've taught me in that group, which is basically knowing when to exit, knowing the targets. I used to give tips to my friends and I would tell them, hey, buy the stock would do great, but I would never tell them when to exit. And then while I was making profit, they were not, because there was no exit point. And that's to me one of the main things. I mean, learning the patterns, learning where it's looking good, when it's not looking so good, when to exit. And I mean, that's been my journey. I love it. I mean, I can't say enough, Jeffrey. I think, I don't know if that captures what you wanted to ask,
No,
or you want me to go in deeper in
well,
something.
hey, did we prepare for this interview at all?
I was biking 5 minutes ago.
I didn't really tell you what I was going to ask you at all, right? So I mean, we had no
Not at all.
conversation. We had no
Not at all.
pre-conversation.
Not
I,
the people that know me know that I don't prepare much. I'm a
yeah,
little bit like you, Jack, in that sense.
I just want everybody to know this is just off the cuff. I'm straight up learning stuff here. We haven't had this conversation before, and Sergio wanted me. He sent me this right here. This is his profit right here. 3 months since we've been starting this 50K challenge, and he's got 100% win rate, which is better than me. He doesn't have, his profit's 640. That's not huge, but it's also a very small account, right? You want to share how big this
That
account is?
Yeah, no, that I'll tell you right now. I mean, I have 5 accounts I do this on. The other ones are obviously larger. And as I said before, I didn't want to put those in because they have a lot of stuff from the past. And I opened this account with 3,100 bucks, 3,100. Then I put out about 200 more. And right now, if I log into it, it's up to 4,200 in 3 months. So that's about, if I'm doing my math correct, it's about a 20% return in 3 months. So
Almost 30, almost
I'm
30%.
not saying the 20% every, let's say just, okay, 30, but let's say we can do 20 every 3 months. I mean, that's 80.
Yeah,
I mean,
80 a
I tell
year.
people that, and I don't know if they don't understand, or they don't grasp the importance. Because I tell some of my buddies, hey, I'm just making. They ask me, how you doing? How about a 20%? Oh, good, you're doing good. I mean, the bank gives you what, 2%, 2.5% a year. So this has been phenomenal. And in your defense, it's easier to manage a smaller account because you don't have the big boys. You have only the small guys, and it's easier to manage. So I have that advantage on this account. The other ones are doing really, really good, other than the burrito people, which I love, and the dog guys. But even with that, I mean, even having said that, and I think you mentioned it before, DJT, not a it's not a, it's in a downtrend. I'm up like 3 grand on that position on the
Yeah.
other accounts. It's been amazing. So it it shows you the power of what you're doing, JT. And I thank you every day, and every time I can. Even though I was doing the same thing, the level of precision and NASA thinking you bring into it changes everything. I mean, it does change everything.
And I got one final question for you before I tell people a little bit about how they can join our group. So,
Yep.
what would you say is your favorite aspect of our insider group?
I would say camaraderie. That's the first thing that comes to mind. I mean, there's people that haven't traded before, obviously, and they ask questions, and nobody belittles them or says a dumb question. Nothing like that. It's like, hey, how do I do a covered call? How do I do a cash secure put? How do I do a synthetic position? And everybody's there to try to chip in and help as much as they can. So I think it's a great community in that sense. So if you run into a pickle, you have somebody to talk to besides your dog or your wife or your mattress, you know?
And that's a priceless thing right there, to have camaraderie and to know that you have people helping you, because for years this was a lonely game, right? You took your losses and you held those in, and you didn't want to go home and kick the dog that day, but you had no one to share it with. And if you were stuck education wise, you really had nowhere to go. It was a harder way. So now that you have these groups, it just really helps everybody. And the most amazing thing though about it is Jeffrey. You know, just the commitment and investment he's put into he's invested himself in your success, which is why I think everybody should be in his all access group.